Hey guys, what's good? This is Andre and today I want to talk to you guys about supply and demand and how to use supply and demand zones for your trading and for your swing trading. Now, first off guys, thank you so much for all of your support throughout the last few days and the last few videos. It really helps me tremendously. Being a small channel, every single like makes a big difference, so thank you so much for your time and for liking my videos. Secondly, what I want to say is that we're taking a lot of profits on a lot of positions nowadays, so if you guys still haven't checked us out on Patreon, I do encourage you to do so. Just for a few examples here, we're taking profit on Hilton. We already took profit on one position, this smaller one. I'm just gonna delete it now, and then we still have the bigger one left in play. We have MU, which is the second time that we're taking from the same support area over here, roughly at 65-ish, and we already took profits once at 74. We're now riding it back up again and took half profits yesterday. We have ticker symbol X, US Steel Corp, which has gone tremendously for us. It's now at 24 bucks pre-market, and it's again a fantastic trade that's gone really well for us. We took profits on Mariott after it retraced back into this circle that we have drawn a couple of weeks ago. It retraced back, we took the trade, and now we took profits here as well. And we also are in the trade for Starbucks right now. Obviously, this is still a bit of a ways to go. So again, guys, I encourage you to check us out on Patreon. We post a lot of free content as well as content towards our paying tiers, and obviously the tiers get a lot more quality content as well as really interesting setups for both swing trades as well as options trades. Now back into today's topics, guys, and I want to talk about NatGas in conjunction with supply and demand zones. Now I'm gonna start here by saying that the NatGas trade is going according to plan. For any of you guys that have been tracking it for the past couple of weeks here, we've been covering it, and again, just a quick summary of what we've discussed. We were hoping for a break above, a retest, we got it, and now we are moving back up. If we managed to close as a higher high on a closing basis, we still haven't managed to do that. I would love a higher high on a closing basis. Now, once that happens, I think the skies will open and we potentially have 2.6 as an initial target here for the upside. Now, guys, to explain support and demand, or supply and demand, sorry, I want to call out this one book. After doing a ton of research, I have found this one book to be the best one on the subject matter, and I really found it to be extremely useful for my own learnings. I read this a long while ago, so I encourage you guys to check it out, and feel free to let me know your ideas as well. If you've read any books, I'd love to know about them if you found any specifically useful. But this one is by Frank Miller. I'm not associated with this guy, but I just really enjoyed the content of the book, so I recommend it with a warm heart. Now, moving back here, guys, I want to start by saying that the markets are fractal. You need to understand that. That means that the same patterns that happen on a monthly can happen on a weekly, can happen on a daily, on a 4-hour chart, 1-hour chart, 5-minute chart. I know that a lot of newbies think that there's this holy grail of chart time frames that they need to be on, that they're missing out on if they're not. You simply need to figure out what works for you, but otherwise the markets are fractal, and what works on a weekly works on a 5-minute chart as well. Now, what I want to make you aware of is that the smaller the time frame, the more likely it is for errors. From that point of view, you want to probably stick on a 1 week, 1 day, 4-hour chart if you're a swing trader. Maybe check the 1-hour chart, but don't go lower than that if you're a swing trader. Sure, if you're a day trader, you probably need a daily, 1-hour and 5-minute charts. I do highly encourage you to use multiple charts as well. I find them extremely useful. So to chart for supply and demand zones, what I recommend is to start with the biggest time frame that you're usually using. By doing that, I would probably just come in here and start looking for supply and demand zones. Now, the way you draw this can vary depending on your willingness to take a risk, because the way we would draw, well, I'm gonna draw one and then explain, right? So this could be a supply zone over here, and as you guys can see, I went from the top week to the bottom week. I didn't go from the body candle to the close, from the close to the open of the body candle. I went from the wick to the other wick. Now, when you do things this way, this here is gonna be your entry, and this here is gonna be your stop. So obviously this is a pretty big gap. This is gonna be your maximum risk, guys. So it's important to understand this. It's important to come up with a structure that works for you and for your risk tolerance. Now, what I recommend doing when starting out would be to just probably do it this way around, where you start from the top wick, because you won't want to be stopped out by mistake. Let's say that you just take the candle body and you enter here and you stop here. You're not gonna want to do that, because if the price rallies to get all of the supply from the top of the wick and then goes lower, so proves that it was a great trade, you're gonna feel really frustrated. So that's why I encourage you to start this way. Enter here, exit here, and this is gonna be a narrower risk than the one that we were discussing prior, and you're gonna be able to capture the move and not be exposed to fake moves. So this is important. Now, guys, what you're looking for when drawing a supply zone is to make sure that first off, we don't have a stair pattern. So that's why I just ignored this part over here, because it's creating a stair pattern. This is not what we're looking for. We're looking for structures where we rally and drop, or structures where we rally, we base, and then we drop. Or obviously there's even the rally, base, rally version. But in all of these, there's no stair pattern. So if yours looks more like this, then this is not a rally base rally. This is something completely different, and you should not treat it as a supply zone. If you need access to this, I basically have created this spreadsheet that automatically weighs the value, the power of your zone. So in this case, for instance, for this one zone that we've created or drawn here, here's how we're gonna quantify it. It's a really strong one. As you guys can see, we assign it 2 points because it fell really aggressively, as you can see here. Then we go from there and we look at the second enhancer, which is time at the zone. The less time at the zone, the more points. We're gonna give it a 2 here as well, because it didn't stay at this zone at all. It fell as soon as it rallied there. And then the third one would be the zone freshness, meaning whether or not price went to feed off of this zone in the meantime, and this is clearly a no. For instance, if we would have had price action that looked more like this, then this zone wouldn't have been as fresh anymore. But in this case, this is a very fresh zone. And then finally, we have the risk to reward ratio. So let's say that price comes back into this zone. We're gonna basically have to say the following. We're gonna take a short position from here. We're gonna stop here as we were discussing, and then we go down to the very next demand zone, which is probably gonna be around here, but obviously we need to figure out how price action actually moves by that time. And we're gonna have a 4-to-1 reward to risk ratio, so that's more than 1-to-3. So we have a total of 9, and I actually come in here and write that down. So I want to make sure that I write that down. I come in here and say 9 weekly, and this is how in the future I'm gonna know exactly what I'm looking for here. Let me just remove, and in the future I'm gonna know exactly what this zone is quantified as. Now obviously you can drop on a 1-hour time frame as well and do exactly the same thing. You can drop on a daily time frame and do exactly the same thing. So for instance, for the daily, I would probably start by saying, okay, here's a zone. I'm gonna color code this one yellow, just because I want to understand which ones are drawn on the daily and which ones are drawn on the weekly. Okay, here's another zone. These are all supply zones, right? So I expect that when price rallies up in these zones based on their power, they might kind of fend off the price with more or less aggressivity. So for this zone, for instance, we're gonna take a look here and we're gonna start quantifying it again, and it's gonna be a strong zone. It's not the strongest. It's gonna be a zone that's obviously fresh, and a zone that's strongest from the point of view of time spent at the zone. It's fresh. We're gonna probably have more than 1-to-3 once it reaches there in terms of risk to reward. So this is an 8. And I'm just going to be looking at trading anything that's more then a 7, and I'm just gonna let the odds stack in my favor. So again, I'm writing this down just so I know in the future, and that's it. And you can do exactly the same for demand zones as well, guys. So this would, for instance, be a demand zone. It's not gonna be strong at all because it's not fresh anymore. Check out this candle over here, the red one, that ate a lot of the demand that we had in this area, and price didn't really leave in an aggressive, strong manner from here. This, for instance, was a really strong demand zone. What's nasty about this one is that the risk reward sucks because it's such a long candle. The candle itself, the candle body is long, but the wicks are just ridiculously long. So that's why this one isn't fantastic. If you have any questions, let me know in the comment section below. Supply and demand works fantastically for things that don't necessarily have an intrinsic value associated with them. So for instance, with stocks where you have the ability to run DCFs and figure out what the intrinsic value of that stock is based on their fundamentals, based on how much money they have, based on a lot of things like that, liabilities and assets and so on and so forth. For things like commodities, things like Bitcoin, cryptocurrencies, Forex, there's not that internal, that fundamental value of the underlying. And so from that point of view, for all of these, it's just a classic fight between supply and demand, between sellers and buyers. And the better you understand that, the better you understand where the sellers are and where the buyers are, the better you're gonna be able to ride the trends and be able to make money as the trends go. Guys, another quick call out. Check out our Patreon. It's a lot of really great quality content. It's just $5 a month. You are not gonna regret it. Thanks so much for your time. Please remember to drop a thumbs up if you enjoy the content. I'll catch you guys later. Take care. Have a fantastic day.